It's September 2019 in New York City. Adam Neumann, the charismatic rockstar CEO of WeWork, has been called to an urgent board meeting at the company's Manhattan headquarters. The office leasing startup has had a tumultuous few weeks. WeWork has been forced to postpone its blockbuster IPO amid concerns from investors regarding the company's poor governance, questionable business model, and consistently negative cash flow.
That model has gone bankrupt multiple times before. So no, I won't be investing in that, and I've seen this movie many times before.
The WeWork board has finally had enough, and SoftBank's Masayoshi Son, WeWork's largest investor and Adam Neumann's biggest supporter, is ready to rip off the band-aid. Masa once loved Adam Neumann as a son, but the CEO's eccentric behavior, party-heavy lifestyle, and unpredictable management decisions have become too destructive for the company. Adam Neumann has to relinquish his CEO role and is ousted from WeWork, a company he founded in 2010. Adam Neumann was once at the helm of one of the world's most valuable startups, charming employees, the media, and investors on his way to a $47 billion valuation by summer 2019. A market cap that made WeWork more valuable than Airbnb, SpaceX, and Stripe. He was featured on the cover of Forbes, and Salesforce CEO Mark Benioff called Adam Neumann one of the greatest entrepreneurs he's ever met. But once WeWork's financials were made public in its S1 filings leading up to its IPO, Adam Neumann's world came crashing down. WeWork lost a whopping $1.6 billion in 2018 with no clear path towards profitability. It turns out community-adjusted EBITDA wasn't a thing after all. Adam's legacy evaporated in a matter of weeks, and his epic rise and fall has been featured in books, documentaries, and an Apple TV miniseries starring Jared Leto. Following his ousting and the ensuing reputational damage, Neumann went radio silent for 2 years. Until now. Adam Neumann is back in business, doing what he does best: raising capital from investors. Adam and his wife Rebecca are listed as co-founders of Flowcarbon, and they've already raised a $70 million Series A round for some of the world's most reputable VCs. Neumann's goal is to reinvent himself from the billion-dollar loser to the man who solved one of mankind's most pressing challenges: climate change. Can Adam Neumann fix his legacy and get the revenge he so desperately needs? Warren Buffett once said that it takes 20 years to build a reputation and 5 minutes to ruin it. To say that Adam Neumann has a steep hill to climb is an understatement. Adam Neumann encouraged rowdy tequila parties at WeWork's offices, sprayed his investors with a fire extinguisher, was caught smoking weed on his Gulfstream G650, and if he ever died, which wasn't likely because his goal was to live forever, his wife Rebecca would be responsible to appoint his successor. Neumann ran a business operation plagued by conflicts of interest, alarming investors from Wall Street to Silicon Valley. He personally borrowed money from WeWork at little to no interest, while leasing buildings that he owned back to WeWork. WeWork was paying him rent while at the same time lending him money. An entity Adam controlled sold the rights to the word "we" to WeWork for almost $6 million, and Adam cashed out $700 million in stock options ahead of the planned IPO. An incredibly questionable move for a founder who's trying to convince investors and employees to buy the stock. Adam Neumann made his first public appearance since leaving WeWork in an interview with Andrew Ross Sorkin in November 2021. The interview is a masterclass in public speaking, reflecting Neumann's incredible ability to persuade his audience.
How easy or hard has it been for you to do business with other people? I mean, are there people when you go to them, they say Adam Neumann's on the phone, I want to take that call, or they say Adam Neumann's on the phone, I don't want to take that call?
So, early on, I was wondering that myself. I think because I'm very comfortable talking about the lessons, I'm very comfortable sharing what it is that worked and didn't work. Entrepreneurs are coming faster than ever before. The meetings start with me saying anything you want to ask. They go straight in, just like you did today. And I share the lessons. I tell them what I think I did right, what I think I did wrong. And I give them the advice that I can. But then very quickly they will say, well, how did you build a brand? And how was it so big? And how do you raise money? And we get into all these things. And I actually find with entrepreneurs, and it's one of my favorite things to do today, I learn so much from them. And the ones that come that are open to learn from my lessons and from my regrets, take it in so fast, and they can go out and build these great things.
Naval Ravikant believes persuasion to be one of the most important skills in life and business. And Robert Cialdini, a leading behavioral scientist and the author of the book Influence, which is an absolute must-read, has said that if you can't get another person to say yes, you will soon fall away. But if you can, you will stay and flourish. So how does Adam Neumann plan to use his persuasion skills to convince you that he's a good, well-intentioned guy after all? How is he planning to stage his comeback? The Kyoto Protocol in 1997 and the Paris Agreement in 2015 were two landmark treaties on climate change that set an international framework on how to reduce global CO2 emissions. The Paris Agreement, which was adopted by 195 countries, aims to limit global warming to well below 2 degrees Celsius, ideally 1.5 degrees, compared to pre-industrial levels. Pre-industrial roughly refers to the time period between 1850 and 1900, and as of 2017, temperatures were approximately 1 degree above the baseline. If human-induced warming continues at this rate, we'll hit the Paris Agreement cap of 1.5 degrees by 2040. You may recall that Obama ushered the US into the Paris Agreement in 2016. Trump withdrew from it in 2020, and Biden re-entered it in 2021. Whether the US is in or out, officials have already put pressure on the private sector to limit greenhouse gas emissions. With mounting regulatory oversight, corporations and business leaders around the world have turned to an innovative financial product called carbon credits to offset their negative environmental impact. The carbon market is Adam Neumann's latest obsession, a market that has ballooned to $7 billion in 2021 and is estimated to grow to $50 billion by 2030, according to McKinsey. Fluorocarbon is betting that they can use crypto to streamline the carbon market by bringing credits on-chain. My initial reaction to this announcement was A, it sounds awfully similar to the marketing gimmick pulled by Long Island blockchain Ice-T in 2017, and B, Adam and Rebecca Neumann's involvement makes it even more sketchy. So to keep myself intellectually honest, I decided to dig deeper to understand the world of carbon markets. Carbon markets' main purpose is obviously to reduce the emission of greenhouse gases. This is primarily done by turning CO2 emissions into a priced commodity called a carbon credit. Why? Because anything that has a price can be used as an incentive. And as we all know, incentives dictate decision-making in business and life. A carbon credit is a permit that represents 1 ton of carbon dioxide that has been removed from the atmosphere. To put that in perspective, 1 ton of CO2 is the amount of emissions generated from driving your car from New York City to Las Vegas. And the average American generates 16 tons of CO2 emissions per year. So how is carbon credit created? A carbon credit is generated from projects around the world that pull greenhouse gases out of the atmosphere or that keep emissions from being released. This could, for example, be through reforestation, conservation, or renewable energy. Every time a project verifies that they have reduced, avoided, or destroyed 1 ton of greenhouse gases, 1 carbon credit is created. The carbon market has 2 different types of marketplaces, a regulated market and a voluntary market. The regulated market is set by cap and trade policies and is mandatory. Companies must meet the requirements set by government officials. Corporations that pollute, such as ExxonMobil and Delta, are issued carbon credits by the government. This allows them to continue to pollute up to a certain limit, a cap that is gradually reduced over time. If Exxon and Delta don't use their full carbon credit allowance, they can sell any unwanted credits to other companies that need them more. This creates an incentive for corporations to 1. Spend money on extra credits if they're exceeding their emissions cap, thereby decreasing their profits, and 2. Sell any unused credits if they're below their emissions cap, which in turn boosts profits. In other words, all things being equal, the fewer carbon credits a company needs, the higher its profits should be. With emission levels set to decrease over time, companies are also incentivized to innovate and find ways to stay below the cap. The voluntary market works slightly differently. Nothing is mandatory. Instead, environmentally conscious companies have the opportunity to offset any carbon footprint simply because they want to. Over 2,000 companies have announced net zero ambitions to achieve Paris climate goals, and approximately 54% of S&P 500 companies have some sort of ESG focus. Surprisingly, Tesla was kicked off S&P's ESG index this year, which is kind of absurd. That being said, ESG accounts for more than just environmental sustainability, and the harsh working conditions at Tesla have come into question lately. Either way, Elon clearly wasn't happy about it. ESG metrics are clearly murky, and so is the carbon market itself. Current voluntary carbon credit marketplaces are fractured, gated, and opaque. The markets are illiquid, most transactions occur over the counter, middlemen capture a lot of the value, and it's close to impossible for retail buyers to participate. This obviously creates a lot of market inefficiency. To combat this, Adam Neumann and his co-founders are using crypto to make the process smoother. Flowcarbon is building an on-chain carbon credit tokenization platform through an open protocol. Flowcarbon basically allows nature-based projects to sell carbon credits to companies who want to reduce their overall carbon footprint, and then allows those tokenized credits to be traded on crypto exchanges. Flowcarbon tokens, including its first token, the Goddess Nature Token, or GNT, are fully backed by the live value of off-chain credits. The tokens can also be destroyed or burned when the owner wants to offset emissions. In other words, Flowcarbon is taking the voluntary carbon market and putting it on the blockchain. Why exactly do carbon credits need to exist on the blockchain? Well, they don't. But the argument for putting credits on the blockchain is that doing so will make raising money easier for climate projects, provide more transparency, and allow smaller projects to more easily sell to big polluters such as Delta and Exxon. Efficient markets are always better than the opposite. A16Z has said that Adam Neumann and his team are best in breed, and that blockchain technology is an obvious solution to carbon credit issues. Mark Cuban agrees with the use case, saying that as someone who bought credits from brokers in the past, buying and burning tokens is far easier. VCs invested around $267 million into climate or carbon-related crypto deals in 2021, and another $156 million so far in 2022. Adam Neumann has clearly found a new niche that investors are salivating over. Since leaving WeWork in 2019, Adam Neumann has invested in a number of startups as well as real estate. He currently owns majority stakes in more than 4,000 apartments across the United States, valued at more than $1 billion. While he's not involved in Flow Carbon's daily operations, he's clearly doing everything he can to rebrand himself. With the likes of A16Z and General Catalyst to back him, he might just stage the greatest business comeback we've seen in a while. Andreessen Horowitz believes the global economy will one day run on the blockchain, and they recently raised a $4.5 billion fund to deploy into Web3-related startups. They know a secret about tech cycles that others don't. Watch this video next to learn why A16Z is going all in on Web3. Thanks a lot.